Hi friends! Alright, last week we talked about shares, right? Investor and trader, their difference. Today we'll talk about the psychology of it, which is really important, right? So let's get it on. Alright, so what's the psychology of it, right? Because it's really important. You're going to go through dips, ups and downs and sideways and nowhere. So psychology is really important when you are investing and trading, right? Because it really plays a lot with your mind, your heart, your soul, I tell you, the effects of it, sometimes you can't even pay attention in your work, all right? That's how important psychology is in when you play with shares, when you invest in shares, trade with shares, right? Psychology is number one, I think, all right? So because they are going down, then you see red, and then like, oh my God, I'm losing money. All right, the psychology is, but it is not actually losing money until you sell it. You say, until I sell it, but it's red. What am I going to do? Don't do anything. Stop. Okay, first, like I said, all right, just hold on. If you are an investor, right, which is long term, remember, if you're investing for long term, and if you have done your homework and due diligence and you are investing in a great company, okay, let me just mention a great company for what? McDonald's. Are you eating McDonald's today? Right? Even though the prices are going up like crazy, you're still going to McDonald's, right? Will you go McDonald's next week or next month? Next year? Okay, let me ask you. If a recession happens next year, are you going to stop going to McDonald's? I definitely won't. I might stop going to other more expensive places, but I might not stop going to McDonald's. McDonald's has so much offer, right? Even below 10, they always try to offer you great offers, right? So even you're on a cheap budget or more expensive budget, anything you can get from McDonald's, right? So for a great company like McDonald's, right, you will see the profit going up and up and up. You know, they're opening new places. A lot of people are always at their shop, whatever the time. So do you think investing in a great company like McDonald's will have you worried? Of course, yes, you might see the price drop, the price going up, price drop, price going up. But if you see their financials, all right, their debts, their profits, even if you go, people are going to their shops. It's not like people are not going to their shops, no matter what the condition is. Recession, market boom, even economy is flat, people are still going to McDonald's, and it will be a safe. You need to put in your mind that you are investing in a great company that is doing money, consistently making money, which is what you are actually doing when you buy a stock. You buy a piece of the company. Okay, then you say why the price goes down, right? Even when, the company is making money and everything. Okay, why does this happen? This happens because when, people, sentiment, the word they like to use is sentiment. That means like people's feelings, all right? People's feelings, you hear a lot in the news, recession coming, and everyone is afraid. Everyone starts to feel afraid, and then they, the value of the money, you can spend, say, like 10 ringgit. Last time you can spend and get a whole meal, even a Big Mac or double cheeseburger. But now 10 ringgit, you cannot even get a full meal. You have to spend like 15 ringgit or even some like almost 20 ringgit to get a full meal with the fries and drinks and everything, like for a Big Mac or double cheeseburger or something, So, because the value of the money, people say, oh my God, my money is decreasing. But because of all these feelings that people are feeling, that's why people tend to sell, When people tend to sell, that's when the prices go down. And when people leverage, another one is when people have high leverage and they are there's margin call. Okay, I won't go so deeply into that. You know, when you hutang, when you take debt, and then people call in to fulfill that debt, you know, because you only have so much margin, and then that's when you need to probably sell off, and you don't have the cash to pay that debt. So what they have to do is you have to sell off the stocks that you own. So this is part of it, right? So one is that people's feelings, and two is when there is margin calls, all right? So when you cannot settle your debt. So these are one of the two majors why prices go down, basically, all right? So don't be afraid. If you are really only investing in your own money, all right? Remember, investing all these things, you invest in only your own money that you don't need to use within the 1, 2, 3, 5 years, okay? It depends on what your goal is, right? So I'm Adelina Azmi, licensed financial planner. Learn more, right? High five to you guys for making and learning. All right, it's always good to learn. All right, see you guys. Thank you so much. All right.